Stick around to check out the futures levels for Monday 11/13. Traders, Nick here. Monday night future session update with levels reopened somewhat flat. I don't think there's much action ahead of the CPI tomorrow, which will most definitely generate some interest and some wacky stuff. So let's keep a level head. These are the boxes that were here before the open or towards the open. We had a box, we had a resistance level which we didn't breach, and we didn't use the lower half of the box. So the lines still hold up. The 4408 number, I believe I mentioned in the prior video, has held up, has been pivotal, and we can see it in action several times. So I expect it to be a place where there'll be an attempt again. In fact, 4416 to 4413 support. If that fails, 4408, and if that fails, anything around 4400 on the ES futures, I believe, will also play a role. On the upside, it's pretty simple. If you beat the prior highs that you have been unable to beat in the last few sessions, you will have a catalyst on your hand, and the upside potential will be immediately in the 4450 area, where we have resistance, but it's somewhat old, so I don't think it's going to be sharp. So it becomes a matter of extensions, how far up they want to go, and they start buying dips. That's the upside scenario. If we have a tizzy that is substantially lower than what we've had on Monday, then we may be talking about coming down to this blue box. So I anticipate hard buyers to step in at 43.85 to 88, 43.85 to 88. Basically, this little circle here is going to come into play again. It's been pivotal if you look left, and there is even a bunch of buyers below inside of a very wide range. By very wide, I mean relatively wide range. So here's the statement. We have a clear-cut breakout lurking above, and we have a bunch of layers of buyers ready to step in. So we are back to needing bad news for the bears to have any sustained selling. If we switch over to the NASDAQ, the NQ, similar story. We're pretty quiet inside of a box that happens to be the September battle. And I believe we have one layer above also from that. So we have the entire September battle on our doorstep. So I'm going to use a very simple, straightforward high number of late. That would be the catalyst up, which is 15,613. 15,613. And then a flash low, pretty sharp. So 15,466. That number has a lot of backups. I'm going to mention the biggest one in volume, which would be 15,375. 15,375. That is a wide zone of high volume by far. Look left, you'll see it. Below that, we have another zone. So you can see, I have a feeling that they will tag team bull the thing. So one segment falls, they're going to switch over to a different segment, unless we have game-changing news, which I don't anticipate. Now, this is the one that has not been able to get any momentum going. This is the small caps RTY. The small caps today had a slight advantage, just a slight advantage, and I guess that's a moral win there. So levels-wise, you have sellers that are piling in, waiting just for us to get up to 1738-ish. You can see the yellow line is actually the mathematical high number, but it's right here as well. So we have a lot of congestion here, some relief in volume, and then a lot of congestion above at 1740. So if you can beat 1720, you're going to meet another seller at 1740, and rinse and repeat at every level. So there's no relief anytime soon without a sharp rally that just blows everything out of the water. Crude oil is still in progress. I would call it broken out, and the level was 77.50 to 77.70, that little zone right there. Cup and handle, inverse head and shoulders, whatever you want. It still has some more upside in it, I would guess, to 79.50 maybe, 79. So from that perspective, they have sellers waiting inside this box around 75.50. But what happened in the process, maybe now they're buying dips and they can go up to 81. I'm not very optimistic, but this is a manipulated ticker. So if you're long, I guess you can ride it up there, but be careful. Scalping would be good. I think a dip to 77.50 will find buyers, and they will come back and challenge. And every higher high they make, they gain more momentum. They're going to need it. There's going to be a lot of sellers above 80.5 from volume perspective. It might be easy, relatively easy to get to 80. It's not going to be easy to plow above that by much. Nat gas is also kind of trying to break out from this 3.2, 3.22 area. 3.4 might be the target. And believe it or not, that might be enough to create a magnet effect to cover the gap up here. I don't know what happened up there. I don't watch it, and I'm just starting to watch it again, so I'll have more information as I build more confidence in there. So 15 cents. The target is somewhere around 3.3 from this, which will put us inside this one candle right there. But there's no volume here, so you might be able to just skid up there before you stop. Bottom line is, if I'm long the nat gas, whether through futures or some other ETF, they're buying dips, higher highs, higher lows. You have to respect that. So GC did something today, I believe. I'll see. I'll confirm it once I go to silver. I don't like this at all on the 15 minutes. Lower lows, lower highs. Not only that, they lost a leg here today, and they're trying to recover it. And if they cannot get to 1960, I think they will probably get to 1932, 1930, which is what I've been saying for a while. I think people are jumping the gun on gold and silver. I've been eager to go long either of those two, and I'm just waiting patiently. Let's step out to the big picture. All right, so we had a super big rally, and everybody got pretty excited about it. That's a pretty big rejection right there. It was an easy breakout, and they chose to come back. And if they choose to lose 1913, 1910, I think they're willing to close this gap, and maybe we'll have an entry in the 1800s. What? All right, so I'm not calling it down to the 1800, but down in the lows, but I see the potential. So let's talk about holding 1920 so we can shut Nick up. If we get to 1900, I think you're already in a gap of volume, and you already triggered something here unofficially. So similar to the S&P almost. So we're not in danger in the S&P, and we're not safe in the S&P, and we're not safe here. There is a scenario that covers this gap, and there is a scenario if we lose this. I don't know what kind of scenario it is. Gold will be down in the 1700s, low 1700s. So what am I saying? If I'm long gold, I'm fine. I'm not adding. If I'm looking to go long gold, I think I'll be patient unless I'm selling some puts and put spreads in the GLD. If I'm trading the futures, the GC, sell the rallies. That's what it is. So I sell it here and see if I can make a lower low. I get long to see if I can bounce back to 1940. So here's a path, maybe. So from here to here, let's see how it played out. I would say it played out well. Maybe this. Maybe. How do I know this is not happening? They stop here and they come back and they take this out. All right, that's gold. Amazing bounce in silver. So today silver beeped at me, and I don't remember what it said. Whoops. Where is it? I know it beeped at me. So alerted me to that it, let me go to daily to see if it fell into, okay, it came down to this candle. That's what it was. So I'm going to go to a 30-minute chart. Here too, they're selling rallies. So what if it's doing these crescent, these, half umbrella shapes? All right, so you have to respect the sellers until we get to 22.6, maybe. Until then, I think they're selling rallies. So be careful. So let's see from here to here. Ignore this. Maybe somewhere inside of 22.5 we falter. Keep that in mind. All right, I think this is it. I'll see you in the live.